Welcome back again. This video is to demonstrate how the income statement forecast is operated. So if you want to forecast your income statement, it means you have already inputted some data in the database which can generate an income statement for you before you put in the assumptions and create a forecast. So let's begin by going into the form and going to this page called report forecaster. So here you just put in the date range of the income statement. So let's put 2016. So 1st January 2016 and 31st December 2016. So once you put that information there, it will create something like that for you. Now the income statement is not completed, so it means maybe there's not enough data there. So let's try that of 2015 and see. So let's go back, report forecaster. So 1st January 2015, 31st December 2015. Let's run it and see. Good. Here at least you got enough data to work with. So at this stage you just change the assumptions in column F. So the ones indicated as not applicable, you just leave them like that. The code will calculate it for you with the gross profit, the earnings before interest, tax, depreciation, and amortization. So you can only change the ones with the digits in them, like 1. If you leave it like that, it will just multiply it by 1. So let's change the cash sales by so that will increase by maybe 2%. Credit sales to increase by maybe 50%, and leave the this should be COGS, cost of goods sold. So I'll correct it in the database. Rent, we can reduce it, maybe minus 0.1, and can change all of them. So for this demonstration purposes, we just do this few accounts, and let's run it and see. So you press this button and it would demand for the number of forecast periods you want to use. So you tell them that you just put maybe 3. Let's put 3 here, and press enter, and it will prepare that for 3 years, and it will do the prepare the gross profits and the other type of profits for you. Let's see if it's working. So the rent was -1, so you should expect your expenses to be decreasing as it is in this case. Here it should be increasing, so exponentially. So yeah, and the same thing applies for credit sales, so which is 50%, so that will be increasing even higher than the 2% for the cash sales. So yeah, that's how you create the forecast, the income statement forecast. Thank you, and hope to see you for the next video. Bye.